It's a key week for the economy and economic data. Tomorrow is November CPI. Wednesday, we get the latest Fed interest rate decision. And Friday, the government could shut down if lawmakers can't reach at least a temporary deal on funding. Joining us now on all this is Heather Boushey, a member of President Biden's Council of Economic Advisors. It's good to see you this morning. Nice backdrop. Heather, do you, once again, we're going to hear from the Fed and Jay Powell. And I know that the Fed needs political independence. But, you know, when you're in the business of trying to get everyone working and, you know, trying to have a strong economy, is there any grousing in the White House about this Fed at this point, that we got things going so well, we understand inflation, but please don't kill the goose that's laying the golden egg? Do you ever hear that?
Well, here's the thing, Joe. We believe in the independence of the Fed, so I will not comment on Fed policy. And certainly what we here at the White House are focused on is making sure that the economy is delivering for working families, that the president is doing what he can to keep the economy on track. And the president has said time and time again that one of the most important economic issues facing families is getting inflation down. And he has made that his priority, doing what he can to address inflation through, all the work that's been happening to make sure supply chains have been functioning, which of course they are now to a larger degree, and all the other things that are helping to lower prices for families, including lower prices that families are facing now for gas prices at the pump, which is certainly a welcome relief during this holiday season, with the typical two-driver family saving about $175 relative to the peak early this summer. So these are the kinds of questions that we in the White House are talking about right now in terms of the economy.
Oh, you look at the gas price. We got it up there now. Oil, $70. So there are positive things on the inflation front. When on a Friday, when you have like last Friday, you have a good jobs number, and then you see that there's wage gains. And all of a sudden, everybody's all up in arms. And the Fed, oh, my God, we got to be much nastier about raising rates than we were. No one at the White House goes that why are higher wages a problem when it's something we've been trying to do for so long? Doesn't I don't know, it just seems like a warped way to try to bring inflation under control.
Well, and, Joe, this is exactly why the president has been so focused on the agenda to make sure that we are supporting industries that are moving us to a clean economy, making sure that our economy can be resilient, and so that we are creating good jobs all across the country. The president last week was focused on the conversation he was having in Phoenix, where there is now an increase in an investment by a company named TSMC to $40 billion in a second semiconductor facility. This is going to create good jobs in that community on top of lots of other investments all across the country in semiconductors and clean energy in U.S. manufacturing. And so the president and the economic team are really focused on, that piece of the real economy, where those jobs are being created and how that is going to be benefiting American families and creating those good jobs, hopefully union jobs across the U.S. economy. Let
me just try to drill down on what you think or what you would concede resulted in the inflation. And a lot of it is in the labor market, so we'll talk about that in a second. But there's also, when you increase demand with stimulus, sometimes that causes some inflation. Would you continue to try to affect some of the president's priorities, knowing that it was counter to what the Fed is doing? Would you continue to have demand increase by spending on whatever social programs you want to spend on? Or at this point, do you think we really need to take a pause, let the Fed affect demand so inflation's come down? Should we keep spending? Got more to do next year?
Well, here's the thing. There have been a series of historic investments that are now going into the economy. This congressional session has been historic in terms of the amount of legislation it's gotten through, much of which on a bipartisan basis, and much of which has been focused on addressing core challenges on the supply side of the economy. We all saw over the course of the pandemic how fragile America's supply chains are. And we've seen, of course, it's brought into stark relief, especially since Putin's unprovoked war in the Ukraine, how we need to make sure that we are focused on this transition to clean energy for the sake of the environment, but also to make sure that we have that energy independence. And so the president's focus on, again, semiconductors, but clean energy, on making and building things here in America, those are the kinds of investments that we need to continue to make to support the economy nationwide. But these are supply side investments that are going to make our economy more productive, more resilient, more competitive internationally over time.
Yeah.